Welcome back. The collapse of 3 regional banks in the U.S. rocked sentiment here in Canada on shares of this country's big banks. An index of TSX-traded banks fell by 6% during March. For more on the recent performance of the big 6 banks and how it affects real estate markets here in Canada, we're joined now by Barry Fenton. He's president and CEO of Lanterra Developments, a prominent developer of condominiums right here in Toronto. Thank you for coming in.
First time I've gotten to meet you, Paul, and pleasure.
It's a pleasure. It's a pleasure likewise. What happens to sentiment among the big lenders at a time when turmoil hits our neighbors to the south in the banking sector?
Well, the nice thing about the top 5 or 6 banks in Canada is that when things turn a little bit yellow, as they would say, they look to the A clients to take them through the forest and make sure they get to the other side. So that's what smart banks have done. They seem to align themselves with good A clients, and then they go from there.
What does go with the A clients mean?
Well, it means to continue to backstop them, to continue to provide construction financing for them, provide other types of financing for them.
How prominent are the big 6 banks in providing financing for the type of projects that Lanterra does, big condominium projects?
Well, our average syndication today will be between $500 and $700 million. So that's going to be taken down by at least 4 to 5 banks. But the banks are still in good shape. I mean, there's no question that there are always effects from other parts of the world, like the States right now. And I'm sure in generality that the global market outlook on how to deal with lending has changed. But every bank needs part of the pie shape being real estate, and they've always lived through it, so it's a good thing.
What about the big run-up in oil prices that is affecting the market today?
Well, I mean, I look at it as coming down in the sense that oil was, Paul, was something like $120 a barrel a year and a half ago, and the real estate market seemed to weather that storm pretty well in that, you know, construction, housing prices were continually going up. I think with pricing of oil down to $70 and back to $80, I think it's a good thing. I mean, I don't see us going back to 120. And in fact, I think it's going to ease on construction costs that we have to pass on to our purchasers at the end of the day.
Right. I was going to ask, what's the read-through from energy prices to real estate? I hear you saying that fuel costs are significant.
Oh, for sure. Fuel costs are significant, but they do affect the final costing of product that we have to pass on to our purchasers. So I think you're going to see an easing of that. And again, for something to go from $70 to $80, okay, it's a big thing over a one-day period. And I kind of understand what happened in that, you know, the U.S. was supposed to fill up their tanks again when they kind of depleted their sources to bring the pricing down. So Saudi Arabia and others said, enough. We're going to now try to figure out other ways to cut costs so we can increase costs, that is. So I just think at the end of the day, this is short-lived. Again, I look at the global picture like real estate, like oil, and look where we were and where we are. So it's a one-day, a one-day event, in my opinion.
What's demand like for condominiums in Toronto right now? There's all kinds of talk, as you well know, about increasing the housing supply in this city.
Well, I think that the issue you're going to always have is when you think about it, putting together the puzzle, the banks are going to be more lenient on who they lend to. And then on the secondary component is there isn't going to be enough supply to deal with the demand. And that's always been the concern here, especially in Toronto. And I see that continuing to take fold here.
There's a mayoral election soon to get underway in Toronto. In fact, this morning, I'm sure you've seen the headlines. Candidates have flocked to City Hall to file their papers. So the race is, I guess, officially underway now. What should the new mayor and Toronto City Council do to help ease the housing shortage here?
Well, I think that if they provide more incentives and they deal with the development charges and decide to charge less or provide incentives to people like ourselves who are going out to provide more inventory, then I think that that's a good thing. But I think overall, I think, you know, Toronto's a good place to be building. And, we know there's going to be 30 people vying for the mayor's job. I wasn't even thinking of announcing it this morning, but...
you have nothing to tell us this morning, do you?
Well, give me a few hours, but I think I have enough to do in my day job, so that's not for me.
I hear you saying, though, that fees on development are material, are they, to decisions to go ahead or to the price of housing to the end purchaser?
Well, I think it's more of just trying to get the process prices through the system. That takes a long time, and the city has been great, but they could probably fast track that a little bit better. And then I also think that some of the charges that they try to collect once someone buys a unit or asks the development community to take the risk on building, they need to ease on that, in my humble opinion.
How does the city's condominium market stack up to other major cities around the world?
One of the strongest in the world's always been.
It seems to have been that way for a good 20 years. I remember people wondering 20 years ago when the condo boom was going to run out of steam.
I remember back in 2007, I sold out Maple Leaf Square, which we still own, together with the Maple Leaf organization in Cadillac Fairview. And we were selling condos at that time at per square foot, $460 a square foot. And today, those units are trading something like $1,500 a foot. So I think we're still, relatively speaking, compared to places like New York and other great places in the world, way, way less costly, but are not costly in price per square foot. We're still relatively inexpensive, and the rental market is very healthy. So it's a good story.
And demand seems to boom because as we know, we can't add new single-family homes in the central part of Toronto. But we certainly can add condominium units, and we have been for many, many years. And yet, from what I understand on pricing, the supply-demand balance is still fairly tight. There's lots of demand for these units, correct?
Very well. There is a lot of demand for it because there isn't enough. Now, if you were buying something in low-rise housing, that market has taken a bit of a hit, but the high-rise component downtown Toronto is so stable and so secure. If I had $5 to invest, I'd probably invest $7 in it.